All right. Well, hello everyone. Good morning. Welcome in to our fiscal year end meeting for 2025. I'm going to be going through USAS first today, and then we're also going to talk about inventory. So we have quite a bit to cover, um, but we'll go ahead and get through it here. So let me go back on my screen just to the main page, and let's just start off with where you can find all of the materials for today. Um, so from the main page here, I'm going down to our SSDT meetings and trainings page. And once you're here, we have a section for the year-end meeting materials. So this 2025 ITC fiscal year-end is going to be the main spot that we're going to hit. I did on the ITC training and registration page, there's like that column next to where you sign up that has the resources. So I added the link there that will actually take you directly to this same page. So fiscal year end. And on the left-hand side here, we have USAS fiscal year end. When we finish up today, the recording will be linked right here if you need to revisit that. And then for USAS, so we're gonna go through the presentation here, and I also have the checklist updated that is in the wiki. So both of these things are like our primary focus for what we're hitting today on the call. We have, at least for the USAS part, we have the some supporting documentation links here. So basically, we just kind of put this out here with things that can be relevant around this time of year. So this setting estimates versus actual variances to zero. They don't need to use that, but that is something that sometimes districts are asking for around this time. We have the budgeting scenario steps linked here. This next one, financial extraction for an ITC. I know just only some of the ITCs need that, but we have that process documented here. And then I did go ahead and link the updated Uniform School Accounting System user manual that I believe was sent out yesterday from AOS. So I know that's something that a lot of people are talking about right now. So I went ahead and just put that link on our page as well, just so that it's all in one place. All right. Let's shift back here and I'm going to hop into our presentation. So the first link here, and actually here, I'm going to just reopen it so we can not have two. So, first of all, our slide, let me get this pulled up a little bit differently here. We're probably going to hop a little back and forth between a couple of things, but I'll try and stay mostly on the presentation. So our first page here is the documentation. This is the page that just showed you how to get to. Um, we have a couple other things to consider um, prior to year end, and these are kind of just some general things, some cleanup things. Again, like for reference, as far as some links in our FAQ. The first thing, closing out all possible purchase orders. So generally, around this time of year, they're trying to make sure that any purchase orders that were entered for this year that are no longer needed or need to be paid on before the end of the year if they need to make a purchase, then they'd be reviewing those. So this links to our FAQ. Our FAQ has some standard questions about purchase orders. Mainly in that section, there are a couple different questions about closing purchase orders, as far as like if there's been a payment on it recently, if the last payment on that purchase order, that last invoice is a full invoice, that will close it out. Um, or they can use a cancel invoice. So those steps are laid out here. The reason that really one of the things that this is important for at fiscal year end is any remaining encumbrances as of June 30th are going to be carried over, and they'll be in that carryover encumbrance field on the account in the next fiscal year. That does impact the expendable figure that's included in that calculation, so that's why this is a good thing to be reviewing before fiscal year end. Can you close $0 balance POs from prior fiscal years with a cancel invoice? You can. So any purchase order, if it is from a prior posting period, from a prior fiscal year, When you do a cancel invoice, it's going to be dating it in the current period. So I know with going back, if you need to change a full invoice, that requires opening a period. The cancel invoice is really the one that kind of is like you can do that, regardless of the situation. Generally, I mean, obviously there are different situations, but that's like your go-to if you have an older PO that you want to close is um the cancel invoice. The one thing though is, oh yeah, $0 balance POs. Okay, yes. So there's nothing left on it. Yep. The next thing I have on here is review old outstanding disbursements. I'm not sure. I hope that most people would have cleaned these up by now if they had them. This is a good point to still review. We kind of had this on here as a thing over time because some districts did have like some memo checks that were outstanding that came over from Classic. And so in our FAQ, there's a process, kind of specifically giving that as an example. But the reason we have this on here is we have the outstanding disbursement report. So if they do have any disbursements that are old that like aren't actually needed to be in their like specific outstanding list, they can clean those up and basically just reconcile them so that they can use that outstanding disbursement report. All right, so this next one, you know what? And I said I was going to stay in the presentation and I'm ready to hop out already. So add or customize a monthly bundle report, um, a monthly report bundle rather. So this is not new. This is a walkthrough that we've had out here. Oops, I think I need to fix my link. That is to the old wiki. Let's go find it. So our USAS documentation. And this one's in the appendix. It's in the report procedures. So we have this scheduling a custom monthly report bundle. And so basically, I'm bringing this one up because we actually, when we did SSDT Direct last month, the report bundles was one thing that I ended up mentioning towards the end of those sessions. And it seemed like there was quite a bit of interest from the districts that we saw where we had, some questions about setting up report bundles and that sort of thing. So I wanted to mention this because if you have districts interested in scheduling a custom bundle that would run on the event of each month close or maybe even like the fiscal year close, this could be a good time to view that, start around the fiscal year, or maybe even over the summer. But if they do want to do, especially the specific situation of having these report bundles generate each time the month is closed, we have the walkthrough here and it's got all the information with the setup of like that specific scenario. So, which exact event to pick and how to set that up. So that is going to be linked here. And let's fix the link real quick. Wait, we need to get out of this view mode. Just do this now so that we know that it's good. I'll check the rest of these links later to make sure all of those are set. Oh yes, and so for in the chat, I'll just read this out too in case anyone's just listening. Michelle had a good note here is we are going to be posting a Did You Know in the main newsletter about options for closing POs. So related to that first bullet point, we will have a note in there, so keep an eye out for that. The next thing on my list here as I switch back to the slideshow is maintenance of effort. So we have a link here as well to the documentation, but I have a slide on this one just to kind of talk about reviewing maintenance of effort. So this is something they can run reports and start, double checking and reviewing before their year end. So prior to funding, due annually compares the district's state and local expenditures to ensure that the district budgets and spends at least the same amount of funds as the previous year. This applies to certain account codes. So we have a specific report. Oops. Let's go back. We have a specific report and it's the SSDT Budget Summary MOE report. It's a template report in there. And that is set up with a special a special account filter that's called SSDT-MOE. And if they run that report, then that has, that'll help them, pull just those accounts so they can review the information on the budget summary and, expenditures prior to those being reported to EMIS. So we like to mention this one because once they do their financial submission for their EMIS reporting, this is something that can get flagged in there, and it may be easier to be fixing now before they close the year versus finding out about it later. We did also do a training last year around the end of the fiscal year. Pat and I did one together, and that is out linked on that is on our YouTube page or linked to like our last year's trainings. But that one, Pat talked through a bit more on the maintenance of effort, and we also talked about some other year-end like EMIS reporting items on that. So that's the maintenance of effort. And here's where we get to our pre-closing procedures. Um, for this, and let me switch here. This is where I want to just highlight our checklist real quick. So if I click on the checklist, this takes us to, again, this is in the appendix of the USAS manual as well. But this is our USAS fiscal year end checklist. These are like the generic steps. So we have a note here, if your districts, they're welcome to use this page, but we totally understand that some of your ITCs, that some of you at the ITC have, some varying procedures sometimes. So if you have your own checklist as well, you're welcome to base it off of this and then translate that. But we have the steps laid out here, and I have pre-closing procedures, month-end closing, fiscal year-end closing, and just the post-closing reminders here. So these different steps, we will be talking through the steps. I have them in the presentation though. So instead of looking at them on the checklist, I'm going to continue on in the slides, but what we're talking about is directly related to the steps that we have here as well. All right. Let me see. Let me try and do it this way here. Instead of switching back and forth because I want to show some things in the software as well. Because as we jump into the pre-closing procedures, this is where we're going to start verifying some data in the system. The first three things we have on the list here is district and building information, making sure that accounts are valid, and checking the OPUs. So these are all things that are going to go in the financial extract. The financial extract for EMIS. And so these are kind of like your yearly double checks to see if anything needs updated. The district building information, OPUs, that's generally already stuff that they have in their software, may not need changed, but sometimes it does. So this is the chance to review. Preparing next year budgets and revenue estimates, and then preparing requisitions for next fiscal year. And then we have the pre-closing procedures. And actually, yeah, so again, if anyone's listening and not looking at the chat, I want to read this out. So Michelle also made a note that we are doing a feature article in the newsletter about EMIS resources. That has a link to that EMIS fiscal year end session that I mentioned related to the MOE. We had a USPS EMIS one as well. So those links are in there. As we continue on, I'm going to look through the stuff that we are checking for like the pre-closing procedures with EMIS. We'll get into, extracting for the financial extract as well. So that is another thing to look out for in the newsletter. And I might as well just say it now because we also are planning when I touch on AOS again, we're also going to include some of that information. So the main newsletter is going to be jam-packed. Okay. All right, so organization detail is the first thing to check here. And I have an instance, so let's just look at it. Let's just look at it in here just so that we can see where we're going. So in core organization, this is the district's like basic info, with their name, their address information, for the software. But if you scroll down, there is a box for central office square footage. So they can double check that, make sure that that is accurate to their central office. Again, they have that in there. They should have that in there already. But if they change buildings in the last year, that may be something that they need to update. And I'm sure that they didn't think to come in here, at the exact time that that happened. So, um, the next thing we want to check is in periodic building profiles. And again, this is their building information. So each one of these, and this is some test data. So, the description might be like, uh, so they come in here and they have, each of their buildings has the square footage for each of their buildings they'd have in there. And then they would break down the transportation and lunchroom percentages for each. Um, my numbers are randomized in this non instance, but these should add up to 100. So that's something that they want to double check. Again, that's going in that in the actual extract file for EMIS.
Amanda,
Yes,
can I ask you a question?
sure.
So, in regards to the central office square footage and the building IRNs,
Hmm.
I don't know if you would have any helpful suggestions. We had a district over the winter that their entire building collapsed because they had like 4 feet of snow or 5 feet of snow over a weekend, and the
Hmm.
entire building collapsed. So they are scattered kind of everywhere.
Okay.
So I know that they're going to ask me that question, and I don't really have a good idea of what to tell them for like the central office square footage because they have just been kind of placed everywhere.
Yeah, that is an interesting situation. I am not 100% sure, but what I would think as far as what I believe they use this for is like, I believe they kind of take this information from the building setup, and then they kind of use that as far as like stats when comparing to the expenses associated with each, IR in each building, right?
Okay.
So I would think that maybe like, and especially if this is a temporary situation, I would think maybe sticking with like what their normal would be, or maybe like, yeah, I mean, maybe what the previous amount is fine. Ultimately, what I would do though is see if you can reach out to DEW
Okay.
and ask them, maybe what they would want there. I don't know. I mean, I really like their numbers, I think is the most important, but this is kind of like a helpful part of it that they take for context. So I think really just hitting, what would give them the best context for, the spending in that situation would probably, well, not just the spending, for the numbers. Um, yeah, that's what I would suggest, but those are also my thoughts.
Okay. All right. Thank you.
Yeah, no problem. Okay. So yeah, so we have here's just our slides for what we looked at there. There is a building information report. So this is a template report you could search, and then that would give them a report if they prefer to look at it that way, or maybe if that's something that someone wants to run and save, that is an option for that information. The next thing is the account validation report. So this report they can run, and it basically is just going to look through the accounts and make sure that they are all valid. Make sure no district has invalid account code, account dimensions prior to using the data collector to check for the level 1/2 errors. So it looks like this. It would just give you like, here's the account code and a validation message. Like it would let you know if you see here, like, this is not a valid function code. So if any of those need cleaned up, we have some examples of the EMIS errors a little bit bigger so that you can see. Um, and if they do have any of these and those accounts need to be updated, oh, actually, sorry, I have one more slide on the errors. Um, so here are some other warnings that are validated. So basically, this step, it's looking through those accounts again. Like you will, once they do the financial extract, that's where we're showing these errors that they could get. Um, but if they need to change those accounts, so say they have one that's invalid, and they've had amounts spent to it this year, they would use account change and then change that to the valid code. So that account change is going to change everything for this fiscal year. So that's kind of a nice thing to find before the end of your fiscal year so that you can run the account change and then have it set when the year is closed. All right, and then so reviewing OPUs is another thing you can do that is also under the core menu. And so in here, this is just setting up the different OPU codes that the district uses. It'll have a description of the building and then the IRN. So I'm sure this is something they all have configured and they're already using, but this is good to review because again, that goes in that EMIS extract. So that is on the list. You know what? I just remembered something. And back to our going all the way back to our previous conversation, but I just wanted to note this. So, back to Andrew's question at the beginning. Um, because when we're talking about the account validations, this sparked in my mind because we were talking about those accounts previously where we have like new accounts that we're going to add for the new year. Um, One thing I remembered as well is because those like when we have something like new codes that we're adding, those are set to be used in the new year. Um, so one thing with that is like a code that's starting in fiscal year 26, if they accidentally used it at the end of 25, like that may cause validation issues. And so that's one of the reasons maybe that we hold off on adding them. However, we had a conversation with the developers. I think there's a Jira issue out there that I can look up. I don't have the number off the top of my head, but they're looking at possibly being able to add start dates when um an account is when like new account parameters are added. So, actually, and I'm sorry, I'm kind of going off the path here when this was a previous conversation, but that said, we may have a way to we're looking into the possibility of that, so that we can add them maybe a little bit sooner in the future, but also make sure that they're used only, for the year that they should be. So, okay, all right. So with that, we covered the operational units, and then the next thing to talk about here is appropriations. So, use the budgeting scenarios option to enter next year proposed budgets and revenue estimates. We have this in the appendix. I have the link here for the budgeting scenario steps. We do our budgeting training quite a bit ahead of time just to make sure that it's all there by the time that everyone's starting this, because I'm sure they're already in swing of getting their budgets in. So that recording is out there from February. But yes, this would be the basic process of um, getting in their budgets. And then once they apply from the proposed amount grid, that will put their budget amounts out there and waiting so that when they close the year and switch to July, those initial figures will be ready to go. And so with that, they could also prepare the requisitions. Requisitions could be entered for July 25. They'd have to create the July posting period. If they post their budgets, the budgets will create July. But July would need to be an open posting period. It does not need to be the current posting period. So, to take a look here, what that may look like is, so for my instance, I'm in June. June is open. June up here in the top is my current period. So when I look at my accounts, when I run reports, it'll default to showing everything as of June 25. However, I have July created and I have it open out here. So if I wanted to create a transaction and date it in July, I could do that because that's available. That's um, open. Okay. So that is our pre-closing procedures. Next, we hop into some of the standard month-end closing. And so for this part, this is, basically like their regular close process. Entering all their transactions for the month, reconciling the USAS records with the bank records, and then, running any reports that they need to make sure that they're balanced. So the one we have noted here is the cash summary compared to the financial detail report. And they can compare the month to date totals on that if they run the financial detail with the month date range. Or if they run it for the fiscal year, compare to the fiscal to date totals, but those should match between those reports. And really, what that step is doing is the cash summary is giving you the view on the account side and the account totals. The financial detail is giving you the running total with based on like the transactions, which should be the same thing, but that's a good way to be checking account totals versus actual transactions. And then once those totals agree, you're balanced and ready to proceed. We just have another note here about other reports to run. So any other reports that they may want to like run or save for the fiscal year, they can certainly do that. Um, And then we have some notes here because your monthly bundle and your fiscal year end bundle are going to generate when the month is closed. Um, if for some reason they didn't want it to run, they can. We have a note here about disabling the bundles. So that's an option. More so probably if there's a situation with like reclosing maybe, but yeah, I think in general they probably won't do that, at least not the first time. Okay. So then outside of that, those standard like month close balancing steps, the other thing that we have is, once we're in the swing of the closing process, is a couple more fiscal year end closing things. First of all, we're going back to the periodic menu. And we have the cash reconciliation in here. So some districts may use this every month. They could if they want to. They don't have to. However, for fiscal year end, they do need to add one out here for June. Again, this goes with the financial submission. So they should come out here and enter in a cash reconciliation. If they have one from the previous June, they can clone that and then update and enter the posting period and enter their information. And then, once they have everything entered here, these two balances at the bottom will should match. So, so they just want to fill that out and then save it up and make sure that that's out there so that when they go ahead and do their financial reporting, that gets picked up. The other thing is, get out of this. The other thing also under periodic menu is the civil proceedings. So if they had any civil proceedings that they need to include in here, and then sorry, I was in I'm in a non-instance and I didn't remember if they cleared these out or put random things in there, but they're anonymized random things. I got scared for a second. But yeah, so they would come in here and then basically just create these, enter fiscal year, enter the details of anything that they need to include with their reporting. All right. We do have a note here. So the federal assistance, I left this in here. The federal assistance pages are also under periodic. We have the summary where they would come in and just add the year. Um, and then federal assistance detail, they're able to add different records here. Um, for reporting of their federal assistance. The reason this was previously in here is because it used to go with the financial extract for EMIS. It does not anymore. So this is completely optional as far as like what that extract is pulling. They don't need to do this at any specific time as far as like fiscal year end and when they're going to be pulling that EMIS extract. So, but we heard once because we were, potentially going to remove this, and we heard that districts are using it for with their auditors. They're entering the information there and then producing those reports related to their audit. So it's still in there. So they can use those pages, they can enter that as needed. And if that's something that they do because their auditors request it, it's still available. They can do it as part of the fiscal year end process, but they really don't have to, I guess, is where it's at. Um, and then the next couple of slides we have here are related to first the extract and also kind of some setup steps here. So in the software, if we go to the configuration, um, we have the EMIS SOAP service configuration here. So you want to review this fiscal year that you have in here and make sure that that is changed to 2025. That is what, when they run the SIF data collector, it's going to pull the information out of USAS in the background, and that's what's actually going to pull the account information, and it's going to base it as of the fiscal year in this configuration. So you really want to make sure you change this before they're doing any data extracting through SIF. And then for that setup, so we have these slides. I'm not gonna go through the specifics here, but if I'm thinking most people have this probably already set up, but um, with connecting the data collector to USAS, you would make an account, and then there's some configuration here with the SOAP endpoint URL. So these two slides give you information on setting that up. So then we get to the EMIS extract. So then as part of this fiscal year end closing process, you would come in here. So after they've checked the building profiles, after they've entered the civil proceedings, after they've done all of those steps, they would come do this EMIS extract and go ahead and extract the file for the fiscal year, generate the extract, and then they'd save it. And the file that comes from this extract is going to be then uploaded into the data collector to be used in combination with then what's pulled from SIF. So download that SEQ file and save that up. This slide, we have the information showing like here's what's in each side. So that EMIS extract file that you pull has the cash reconciliation, the civil proceedings, district and building profile information. But when they put that in the data collector and then actually pull from SIF, they're going to get the actual account data. All of these, that information is going to actually pull through that background SOAP connection. All right. Similar like with month end, if there are any fiscal year specific reports that they want to run and save, they can. There is a fiscal year end reports bundle that's going to run when they close the period. Um, so and we'll talk about this when we get to the next steps as well. So here's the list of the reports that go specifically in the report bundle. This is also in combination with the monthly reports as well. So with that, then once they have everything balance set to go, they got the EMIS information set. They are ready to close June and switch over to the new fiscal year. Excuse me. So they would go to posting periods, click to close June. Let me just make sure. Let me double check this. I believe I'm gonna click this. So I just want to make sure I'm set up not to send anything here. I didn't think so, but so posting periods, and we're just gonna close June. Sure, you want to continue? Yes. Especially at fiscal year end, this could take a minute to process here. It's going to it's doing a little bit more calculating than a regular month because it's not just closing that month, it's also posting all of the encumbrances over to the carryover encumbrance for the new year. So if this takes some loading time when they do it, let it go. They could just let it process, keep it in a side tab if they want, um, but let that close up. The other thing that's going to happen at that step, the monthly report bundle and the fiscal report bundle are going to kick off. Those are going to run because June is the last period of the fiscal year. It'll know. And then we have this note here. So if there are custom report bundles scheduled, now, I mentioned earlier, with the report bundles, we have that walkthrough in the appendix of setting up the custom bundles. If they do have those set up, so when this is closing, see, we still have June current right now. If we close June and switch right away to July, um, the standard SSDT bundles are able to, um, since those are like standard ones, we were able to program it in so that those will always run on the month being closed. If they have the custom ones, those reports are running like in real time when the bundles are generated. So if they have custom bundles, then they may want to temporarily leave June as current until those other report bundles finish. Now, with that said, July can still be open. July, they can still start. That doesn't need to hold up their processing. They shouldn't, wait to, especially if they have a lot of those bundles, and that might take a while. We don't want anyone to be, sitting there not being able to proceed with their work. So even if July is not current, it's still available for use if they needed to start entering information there. But yeah, that's one thing to watch out for if you have the report bundles set up, specifically in the situation of running on the posting period close event. So while they're doing that, they could check those if they're the ones that scheduled them. They may be able to see them. Actually, sorry, yeah. If they're the ones that have the bundles, then when the custom bundles get kicked off by the event, they will go to the job scheduler. So that's a way that they could keep tabs on those. And then when they are ready to switch to current, you just check make July current. Yep. And we're good to go. So then at that point, they are closed for the month and the fiscal year. So we move on to the post-closing procedures. This first one, it's funny reviewing our presentation here. I noticed we do have, a lot of this. It's like since this stuff rolls over year to year and it's the same. A lot of this is double checks. So this is another one where the district audit job for AOS was something added in the last couple years, I think. And so if uh if you have this scheduled, which likely I believe when these came out, AOS sort of had everyone schedule them on a yearly basis. So if this is set up to run once a year and the job is already out there in the job scheduler, then you don't need to reschedule it. It'll continue to run each year. So that's not something that you like absolutely have to do again every year because it might be set to go. What is good to do though is check it. So basically this note is what we're focusing on here. The job would be visible on the utilities job scheduler grid by the user that scheduled it and admin users. So going out there and checking in the job scheduler just to make sure that the audit job is still scheduled and set to go. Nothing happened to that job. It wasn't like deleted accidentally or anything. Would be good. If it needs to be created, here are the steps. And then we get into our financial data reporting. So this is where we kind of hop back to talking about that submission. And I thought I got all the ODE references, but I didn't. Um, so we're going to submit to DEW. That process is done through EMIS-R. This is the responsibility of the district. So an authorized person in the district, whether that is the EMIS coordinator or the treasurer, they're going to upload that flat file, which is the SEQ extract. And then they're going to run the data collection process and get that data submitted. It must be submitted before period H closes for the fiscal year. And then we have a reminder. So back in the day, capital assets were included in this. They are no longer included as of fiscal year 20. So we're pretty past that. But just in case that question comes up, leave that on there. And here is our schedules. So we have the data collection calendars out there. I put a link here to the page where they have the schedules at the bottom here. But this is a snapshot of what it's looking like right now. I saw this yesterday. So the financial collection opens in June, closes at the end of August. So that's the current schedule, but sometimes those do change. So it's always best to refer directly to their website. Make sure you're looking at the most up-to-date calendar. And then here are some additional notes, and this is kind of like what we were discussing on one of the previous slides, but we have sort of a nice little screenshot organization here, is that EMIS extract file, so from the extracts menu. That one is going to have the data entered in periodic, and then the SIF zone when they're actually running that is going to include cash accounts, expenditure accounts, revenue accounts, and those operational codes. All right. Next, and we're rounding it up here with, just a couple of these last things that they would do. And we have from the gap extracts menu. Um, sorry. Just a second. Okay. So from the gap extracts menu, they would be able to create the gap export file to be used with WebGap. So that again extracts gap. This one's super simple. They're just picking the fiscal year, clicking submit, and that's gonna generate a file for them to download to be able to use with that. And they can attach that file in an email to whoever is responsible for uploading the file into WebGap. Can you ask a gap related question? Sure.
Okay, so this accounts payable report that was like similar to PAYABL in Classic. I feel like that's for Gap sometimes,
Okay.
so what I want to ask, and it says it, but I think my brain, I've just thought about this too many different ways, so I need somebody to set me straight here. Reports that would count for this, they have to be, the invoice date would be in FY 25, and then they're paid in FY 26, and it's only if the invoice date's in the prior year, or it's all POs, like prior year POs paid in FY 26. That's I guess it's kind of like, what do we
What does it
what
pick
do
up?
what does it pick up? And then I guess what if anybody knows what Gap actually wants, right? Because there's a
Yeah.
difference, there could be a difference there between what the report picks up and what they think they want sometimes. I
Right.
assume there's not, but you know what I'm saying. That sometimes they want things that are confusing.
Yeah, yeah, I get that. Well, and so this one, I don't know that I can necessarily answer the second part of what exactly they want. I mean, I have like a general idea, but so I'll do my best with that part. But as far as the report, so I think just referring to this, let me see. I think it's kind of probably this paragraph here. Um, so the date, so here's where we're talking about the date. Used in determining what items will pull. And then, yeah, here's what I'm looking for. Items that have a received date prior to the date entered and a paid date after the date entered. Okay. So when we're talking that, so usually this defaults to the end of the year. Um,
Mhm.
and then here, let me open another window so we can kind of hop back and forth. Actually, we probably don't need to be here anymore. Okay. So when we're looking at the invoice, the first part that it says is the receive date prior, so the receive date in the prior year. So if I'm looking at an invoice, the receive date is down here on the item, this date
Okay,
right here. So if that receive date is in fiscal year 25, but then, and so not the invoice date, but the paid date, and then it's paid in fiscal year 26, then it's going to pick up.
I see. So so there's where that's where my brain, I was focusing on invoice date. It's the received. So like let's say, so you're saying it gets, you get it in the mail on 6/27, but then you don't get the invoice until July. That doesn't really matter, right? Like you're saying if you physically received it in FY25 and then you pay it at some point in FY26, regardless of when you got the invoice, that's what we're talking about. And I see what Pat said right there, received in FY25, but still owed and paid in FY26. So it's not doing anything with that vendor invoice date. Because you could see, right,
Right.
hypothetically, you get something in the mail a couple days before you get the bill. I
Yeah.
mean, not normally, but sure, you could do it,
Right. Well,
especially if they're billing you on kind of a regular cycle that doesn't really have to do with when you're receiving things.
mm-hmm. Mm-hmm. Well, and I'll say, and that that sounds like the scenario here. I will say that part I'm a little bit less like I can't necessarily confirm I'm not that I agree that sounds like the situation. That's the part where more so like I can tell you how it works in the software, but as far as like exactly what they want based on like when it's received or invoice, the actual like process and procedure that the gap auditors, want it to apply to, that might be something better to try and check, with them or have the district, asked to clarify that. But that said, what you described sounds right to me. So
Okay.
great.
Well, and this is definitely the right report, and I see
Yeah.
the dates. Like, that's good. Okay, so
Yeah.
that's the right report. These are the dates. Yeah. Okay.
Yeah. One other thing I want to say about this, and I think we might have this in the FAQ, but one thing that comes up with this report is so this received date when you're creating the invoice, if they don't enter, like if they don't manually enter the receive date, it does default to the regular invoice date. So if I were to see like and see this one has a different, vendor invoice date than date. So if I were to enter these two and leave the receive date blank on the items, when I save this, it's going to automatically use this date. Now, some districts do, enter in the like as far as the vendor invoice date, because this one's optional. Some people don't use that, some people do. Um, but that date, if that is the one that they like commonly would want to be the receive date, if they just let it default, we do have an optional rule that's available. So if you have districts
Mm.
specifically that may want that as an option, you would be able to help them with enabling the rule. And it's this one right here. So modifies receive date to vendor invoice date.
Mm. I like
And
that.
so that would have it so that like when they save, it would use the vendor invoice date instead to default as that receive date. So that is an option, and that's something we added kind of because one thing that was happening with this report is that they were, some it depend and because it depends on how the district uses those date fields. Not everybody does it exactly the same, so that's why it was kind of like an optional thing. But yeah, if they don't have the receive dates set to the earlier one, then they could run this report and not see it. So that's something that's good to anticipate at this time of year to make sure that those receive dates get set correctly, you know, before they close the fiscal year, and then what, because they're usually running that later. So, yes.
Thank you, Paul. I appreciate it.
Yeah, no
Hopefully it was
problem.
helpful for someone else too. It was helpful for me.
Yeah. So as far as that GEP extract, that would be used with WebGap. And so we have the link here for that, and the WebGap wiki link is available as well. And then last thing here I'll cover. So I just did add a slide about the USAS manual. So they updated that the other day. They sent something out yesterday, I believe, with the updated manual. So I put the link here. I know that this has been a hot topic, so I'm sure most of you have been talking about this, have been hearing about this from your districts, but just in case, I wanted to make sure that you know, everyone was aware that that got updated. A couple notes here that I wanted to make. We will be putting together, I know I mentioned some information to be in the newsletter regarding the software, the parts of the software that can be used for some of these changes. The actual changes, you know, what AOS wants, they have, with updating the manual, they've updated the codes there. They had an appendix that went through all of the information as well, which I need to dig into a little bit more myself since I was preparing for this training. It didn't get in there, but I would say check that out. Check out the appendix. They also have an FAQ that goes over the information. So most of the information about this is going to come from the AOS resources and not us. However, I wanted to touch on a couple things because, you know, when they're looking at making those changes, when they're looking at what they need to do, of course, they need to do those pieces in the software. So, and again, we'll be communicating, you know, more detail about this later. So this is just sort of like a check-in just to make sure that if anybody didn't see this yet, it's out there. But a couple things, so a couple things that that are related. So with like adding accounts, specifically the general fund accounts that they may be looking to add, we do have mass load available, and that can be used to add expenditure and revenue accounts. I actually recently went through this page. Let me open this. Recently updated and kind of revamped the mass load page. So if this is something that you may need for that, once I scroll down here, kind of updated all of the fields. So all of the account code fields are here and added templates. So we do have the template report. Um, Additionally, though, especially if they're taking like a certain subset of accounts and just changing one piece of the code, they can use the account grids and then create a report to Excel field names. So there's certainly options. That is available. Mass load is something you can use right now. So if there are certain accounts that they want to add from a spreadsheet, that option can be used at any time. As far as the new special cost centers, so the way that they are adding those new special cost centers for the general fund, it's like 9, 1, a number, and then X. Those are designated codes that are to be used for certain things now. The way that special cost centers previously were allowed in the in the software is it would be allowed to have that same like setup where the last character can be an alpha character. So technically they could add those now. Those are something that aren't like restricted. We will be doing an update though, so that there is like a warning, just, you know, saying that maybe not a warning, but more of a confirmation saying that those are, you know, designated special cost centers. So there'll be an update related to that. Um, and then as far as funds, there's a couple things available here. Mass change. So if they're reviewing funds and need to inactivate accounts, simply inactivating a fund will make it so that any accounts any underlying accounts aren't going to be available on transactions. Sometimes they also want to like actually have those, show with the inactive check mark as well. So with this, we have a mass change out here. This takes us to our appendix page. Let me make sure it hops to the right spot. No. So downloadable mass change definitions. We have a section here, inactivating accounts associated with inactive cash accounts. So basically, again, something that's out here now, if they needed to inactivate cash accounts, this would be a good resource for that. So this gives you the information, and then they would be able to download this and use this with their account grids. Distribution error correction. So that is a page in the software that can be used for reassigning expenditures. So if they had expenditures that were originally spent in, one account, but it actually should have been in a different place. Maybe when they're looking at, the remaining amounts they have on their grants, that could be useful. So that is something again available out there. And then fund change. So I know fund change has been, part of this discussion. Fund change is the piece that we are still working on. That will be released before the end of calendar year 25. So that's not yet available, but it's in the works. That is only for the situation where they need to move an entire fund from a current one to a new one that doesn't exist. So that's only one piece of the puzzle here as far as um, some of the things that AOS has mapped out for the changes. So we have coordinated with them on that. In those situations, that fund change is going to, it'll change everything for the fiscal year. And so once that's released, they would be able to run that afterwards, and it would change everything for the full year to meet the requirement that they need to use that before end of fiscal year 26. And then the last thing here is just changes to the valid account codes will be updated near the start of fiscal year 26. That is pretty much what we were talking about earlier. Andrew's question at the start. So yes, if they have new codes, like for example, like new receipt codes that they're adding, those aren't yet something that that is a valid code right now. So we get a list behind the scenes of all of those codes, and then the developers update and add those around the start of the fiscal year. Right now, the JIRA issue specifically for the receipt codes is planned for the release on July 4th. So yes. So that is that part. Um we are wrapped up with the USAS portion here. So if we had any more questions, I can take those. We have some upcoming trainings as well. We are going to be covering inventory today. Also, I'm going to do a little break just so we can kind of reset before inventory. May 30th, we've added a session for document store training. So that is out there on the training and registration page. So feel free to register for that if you haven't already. June 13th. Actually, so June and July, because we know June and July are kind of busy months for everyone. Generally when we do our Fridays with fiscal, we try and do we look at doing like a USAS, a USPS, we have, the other applications thrown in there. But what we decided this year to do for June and July is do sort of a combo session. So June, we're doing reports. In July, we're doing grids. And so we're going to have those basically be like a double session. So we have them both marked that they could be about 3 hours. But the reason for that is that we're working, so like for reports, it's going to be Lori and I, and we're going to do each side of the equation. So talk about USAS, reports in the USAS context, and then talk about payroll reports. And we figured, hey, let's just do this all on the same day so that we kind of have a combo, and then it's one day of the training session as well, since everyone is is busy and doesn't have that much extra time. Um so that's the plan for those. Yes, and that is it for our USAS portion. I'll stop talking now and see if anybody else has questions. Okay. All right. Well, thank you for attending for the USAS portion. If anybody's not sticking around for inventory, but what I'll do is let's take just like a 5-minute break and come back at 10:10. And then I'll kick us off and we'll go through all of the inventory fiscal year end information. And we're back. Okay, so I will go ahead and get us rolling again here. So what we're gonna do is go ahead and switch gears into the inventory fiscal year end information. I'm still on this ITC fiscal year end meeting page, and if we scroll down a bit, just below USAS, we have the inventory fiscal year end information here. So again, let me click and open my presentation, and we'll start here. So we also have the link to our meetings and trainings page for the year-end materials. So that's the page that we were looking at. For this one, we hop kind of right into our pre-closing procedures. Now let me make sure I have my notes up here. Just a minute. Okay. The other thing that we have on linked on this page is our fiscal year-end checklist. So similar with USAS, we have pre-closing procedures. I'm going to talk through those, on the slide, take a look at some things in the software, but the steps that we're talking through are also the checklist. So we just kind of have it in a little bit, different visual with the presentation, but we're talking through all these same steps here. So this is available out here, pre-closing, fiscal year end closing, and all the detail here as to that process. So that's where we're at. As far as pre-closing procedures, so really getting ready for the close is doing the current year processing. And I know for inventory, sometimes they keep up on it throughout the year. Sometimes they kind of save their items and and add them, all at once. I've seen that, before they close. So when they're reviewing items received on or prior to June 30th should be added to the inventory for fiscal year 25. Items received after June 30th can be added to the inventory pending file for fiscal year 26. If depreciation has been changed on items and it's necessary to recalculate the life-to-date depreciation, you would be able to select desired items from the grid and select depreciate. I don't believe this is something that is going to be happening all the time. This is like a pretty specific situation, but we have it on here. So we have a link here to the items documentation. And this goes through some of the information with using that depreciate option. Here, let me get there. But see, we sort of have a warning here that, making changes to this, it's more of like a cleanup thing, in preparation for gap reporting. We have some other documentation as far as like depreciation calculating and stuff like that. So I don't anticipate that this is something that they'll always be doing, but it's something that we have on the checklist so that if it is something that is necessary, you have the links to the information for that. And what I'm talking about here is if we have an item on this grid, and you were to select and do this depreciate option at the top, it defaults first to have a projection, and that'll generate a report. And if there are things that would change the depreciation calculation, it would show on this report. Now, I don't have that in this case, but things like the life expectancy was a question I had recently about changing the life expectancy on something that was already depreciated, or certain changes the impact that depreciation calculation. One thing to note with that though, so some items, if they have multiple acquisitions over time, that depreciation life to date currently takes that into account in a certain way. But if you recalculate, it's not taking into account, it's basically going to, it could recalculate that information as well. We have a note. So they could lose their true depreciation history. So that's just something to consider. The situation of the item when using that option. And then we have the links in the PowerPoint as well. Next, ensure that items that meet or exceed the entity's capitalization threshold are marked as capitalized. On the items grid, add the capitalized column and filter using the cap threshold. If there are items that meet the threshold but are marked false, then you want to look into those items. So again, we're on this item grid. I'm just going to do some filtering here to active. This capitalized column right here is what we're looking at. But actually, wait, let's go into the capitalization criteria first. So this is where it would be set. And then actually I lied. Let's go into fiscal year. So you set the information in capitalization criteria, but it also shows on your actual fiscal year. So sorry, I'm looking at some older data here, but just for an example of where we're looking is I have the dollar limit and then I have the life limit. So that's going to be our criteria. And if I go in here, what I can do is say, okay, I want anything that's greater than 2,099 because again, my limit for capitalizing is either 3,000 or more, and then any life expectancy would be okay. But say, if you had a life expectancy and you might still want to check and make sure that that's as expected, anything that meets this criteria should be capitalized. So capitalized true. I can do like a sort on this column and see I have some really old ones. Wait, where were those? So if any aren't capitalized, I would look into those. Yeah, again, these are pretty old, so and this is test data, but that's what you would want to double check. You know what? It's because I didn't put my 99s in. Yeah. I was like, wait a second, I didn't think I had any that were false in this data, but it's because of the amounts. They're I put .00. So once we have to just anything higher than this, so 3,000 or more would be capitalized. And when I click to sort, now we can see everything in this grid is true, which is what I was expecting. So all right. All right. So next we have our item organization. And this is something that we're going to talk about now, not necessarily like a pre-closing like step you need to do or anything. We're going to kind of switch gears and just talk about how some of these items are organized, because this is going to be very relevant once we get to looking at the reports. So if we come to if we look at an item here, we have under the current information, we have the fund, the function, the asset class. So each item is defined with a fund, function, and asset class. These are configured under the core menu as far as like what is available for those three options, but each item is grouped into one of those categories. And then this is showing, so on the core menu, if you were to open that up and look at the asset classes, you could see the full list of, what those asset classes are. Same thing for fund and function. For funds, this one I want to note specifically because the funds are used to determine the current fund for which an item is being used. The fund is not necessarily the source from which the item was purchased, which sometimes that is a question that comes up on these. The fund code is attached to a fund type. So let's look at this one. So in this case, this tag is attached to the 001 general fund. Okay. If I come to our funds page and look at our setup, now, where this gets confusing because so it's the fund associated with the item, not necessarily where it was purchased from. However, these are 3-digit codes that pretty much translate to like what they're used to the 3-digit codes, fund codes being in USAS. So understandably confusing, sometimes. The other thing I want to show here is that each one of these is linked to a fund type. So governmental fund type is assigned here for the general fund. And that is going to come into play when we're looking at the reports in a little bit as well. Um, Let me show you. So the item's gonna hold that information as far as the category, but one part here is that an item could have multiple acquisitions. So what happens when an item is purchased from two different funds? Like maybe it's purchased partially from a grant and partially from the general fund, and they want to make sure they can track both. Um, so let's just look at an example here is we have this tag number 2 was the one we just looked at, and that has an existing acquisition from the general fund. If I were to create another acquisition to add on to that item, and say this one is from, I think I should be able to, hang on. This one is from like a grant fund. Okay, so this one's from a different fund. And we have an amount, and this is going to add, if I add an acquisition here, that would add to the original cost for this item. So this portion of the item, this amount of the original cost of the item was paid from this account code instead. Notice over here, because this item already exists, I'm just adding on an acquisition to it. Over here, the item information as far as fund, function, and asset class is already defined. It does not change even if I have an acquisition paid out of elsewhere, because the fund code is for which an item is currently being used, not necessarily where it was paid from. And so just to go over this, because there's two different ways to kind of like look at this, and there are different reports for showing each of those pieces of information. So if I were to go ahead, I'm not going to actually create this one, but if I were to save this up, now I have account code. Now I have an acquisition for the specific amount that was purchased from this fund, but my item would still be associated with the fund it's being used for. So with that, source versus fund code, yes, I think I said all this already. Uh, when it comes to the reports that we'll look at, the gap report, most of the gap reports in general, when we start looking at the schedule of change reports, those use the fund code that is on the item. The exceptions are reports that reference source. So like a fixed asset by source report is what's going to use the fund that's on the acquisition. The other thing, just to kind of set us up here for what we're looking at with these reports, is two primary sort of pieces of information that are important. The original cost, so the cost of an item as given on the purchase order, or the sum of all acquisition amounts for the tag number. So let's hop back over to our items here and just look real quick. So if I scroll down here, I have my original cost right over here. And so when I add an acquisition, it's going to add whatever the acquisition amount is to this original cost, or when like the item's originally created, the acquisition's created, and that's going to populate the original cost. This cannot be manually entered. This cannot be manually updated. This is specifically coming from the acquisitions. One thing is, so in in the current software, that's the case. It's automatically calculated and can't be edited. Um, if they had classic data, there are some situations where the original cost didn't necessarily like match what the acquisitions were. So we do have a report that we added, acquisition original cost mismatch report, that could be used to review and see if there are any items in that scenario. Basically, the acquisitions, and they have a checkbox that says update original cost. So if that is checked, any acquisitions with that check, the amounts from those should match the original cost. This the acquisition totals, the acquisition amounts are used to calculate the depreciation now. So even if those are old ones, if you have any that are still depreciating, then those should be corrected if there's any in that situation. So that's a good thing to review as well, to make sure that the district doesn't have anything on there that may need to be cleaned up for the depreciation. I think we had some districts that, you know, ran into calculations with that last year. So hopefully everyone's cleaned up now, but that is something to keep an eye out for. The other thing on the item that we want to look at is or that we'll be talking about rather, life to date depreciation. So the life to date depreciation down here is the other piece. So we have original cost and depreciation that we're going to be keeping an eye on. And life to date depreciation, so that's the total amount of depreciation for the item from the beginning depreciation date until the last fiscal year closed. Okay, so now we're gonna be kind of looking at our fiscal year end closing procedures. Once all of the assets have been entered in the fiscal year, so any acquisitions that they needed to add, any items that they needed to dispose of, the district can run the recommended list of reports. This includes all necessary GAAP reports if GAAP is enabled for the entity. And then we have the slides where we're going to go through these reports. So first of all, we have a link to our documentation page for the GAAP reports. All GAAP reports are canned reports located under the reports menu. So system GAAP reports. It's this first one here. And it gives us all of our specific GAAP reports. The first thing to note, and this is right from the documentation page, by default, like it's configured in, these GAAP reports exclude items that are not capitalized. They exclude any items that are disposed of, inactive, or old tag item status. And then items coded as operating leases. So this is only going to be pretty much like active capitalized items that are automatically filtered down to in these reports, because those are what need to be reported for GAAP. When this becomes relevant is, so these ones automatically filtered to qualifying items. But if I were to run one of these other ones and try and compare, you want to keep that in mind, because if you're running a non-GAAP report, you may want to filter it the same way. You know, if I'm going to compare totals on, you know, my depreciation, my GAAP depreciation report, but then I want to run a book value report, then when you're looking at the configuration here, you know, capitalized items and statuses, so everything except for not disposed of, not inactive, and not old tag items. So if I wanted to see the same information as what my GAAP report pulls on another report, that's how I would want to filter to run this. So something to keep in mind. That's more like a balancing thing, just to make sure that you know that the GAAP reports like do exclude certain things by default. All right, so the first one that we're gonna talk about here is the fixed assets by source report. This is a summary of the original cost of capitalized items by their source or fund in the items that were charged on the purchase order. So this is where you know, we looked at how there's the fund on the item that it groups into, and then how there's the actual like acquisition full like account code. And so this is the one that uses the acquisition account code from where it was charged to, from where it was, from the purchase order, what that account code. So it actually looks at the acquisition, looks at the fund there, and then filters this into a report and summarizes the original cost. Next, we have the fixed assets by function and class. So this is a schedule of fixed assets by function and class. There are multiple different formats that you can generate. So going here. Let's see. Oh, I clicked the wrong one. I was like, wait a second, where's my options? Okay, so fixed assets by function and class report. So we have a couple different ways you can run this: by function and class, by class, or a summary by function and class. So those are your options here as far as generating the report. So for fiscal year end, it is recommended to generate for all three formats. Those are included in the bundle as well. And then this one shows original cost. So with the schedule by function class, it shows the original cost and the book value. And then the book value is the original cost minus the total depreciation. We have from a previous overview training that we have links on these to one that Michelle did where she explained these different reports. And so I left those links to that recording at the bottom of each of these slides as well. So if that's something that you want to see about a specific report, I left those linked in there. The schedule of change in fixed assets. So this one is changes in capital assets during the fiscal year. You can generate this in summary or detail version. And again, for fiscal year end, recommended to run all three types. Let me get to this one. So schedule of changed in fixed assets. So this one, the fixed assets is the one that's going to basically look at like the original cost. It's going to look at like the base amount of cost for your fixed assets. So when you generate this, we have fund, function, or asset class. So each of those items is categorized into a specific fund, function, and asset class, and then that is directly used when we're running these reports. The other important thing with this report is summary, the summary checkbox here. There's a detail version and there's a summary version. Let's run the summary version. And I guess while I'm running that, I know I do have a screenshot here as well, which maybe I should just stick with that. So this is what our summary version is. This is what our summary report's gonna look like. Open this up. And the first thing I just wanted to point out with running this is, so notice that our first header here, we have fiduciary, we have governmental. So the fund types, remember when we looked under the core menu, we looked at the fund setup and we said each one of those funds is associated with a fund type. So that is used to break up these reports. Even when run for like the asset classes instead, like those fund types are consistently used. So that's where those are coming from. And then from here, we have this broken down into the fund that is assigned to each of those to the items. And then this is pulling a summary. So it's pulling like a full group of totals here. Now as far as it comes to columns, so beginning value, so that's going to be where you were at the start of the fiscal year, what that beginning value is. And then we have sort of a math equation with these. So plus any acquisition amounts. So if any acquisitions were created within the fiscal year, if they had, they were pulling pending items from POs and they were creating acquisitions, creating new items, or like adding acquisitions to existing items, any acquisitions that are dated within that current fiscal year, within the fiscal year you're looking at your closing, that's going to show in this column. Now, if you were to run the detail version, that detail is what's going to show. Any of these things that were in the current year are going to be listed on the detail version. Minus the disposition amount. So if any items were disposed of with and that disposition happened in this fiscal year, that's going to be subtracted. We have columns for transfers. So if there were like amounts that were moved, transferred from like one asset class to another, the asset class changed, those would be accounted for in this part of the equation. And so if I had something that maybe moved from, this first asset class to this last one, like I would see, okay, transferred out amount and then transferred in amount. And so those two generally would counteract each other in these two columns. And then we have a column for adjustment amount. So there are some situations where adjustments could happen. And that would be taken into account either positive or negative in the equation. And that calculation right there is what determines the ending balance. So especially when kind of like, if you're looking at these and you're looking at, how did we get to this ending balance? There are only so many pieces of this equation. So I use this report a lot when we're talking about like balancing questions, because this really gives you a picture of where we started, here's what happened in the year, and here's where we're ending for the fiscal year. Now on this report, this ending balance will then for the following year be the beginning value. All right. And so that's with the fixed asset, the original cost. And then let's see. So fixed assets by source, fixed assets by function and class, and schedule of change in fixed assets. Notice all fixed assets. So original cost for all three of those reports should match at fiscal year end. So that is one thing to check. And then switching gears a little bit, in the last gap report we have is schedule of change in depreciation. This one shows changes in depreciation of capital assets during the current fiscal year. Very similar, looking to our schedule of change in fixed assets when we run schedule of change in depreciation. Again, this one you could run by fund, function, or asset class as far as how that's going to be categorized. And this works the same way, where the summary is going to give us like, the beginning, what happened during the year, and then the ending balance. And the detail, if we leave that unchecked, is going to show a listing of the things that happened just in this year. So I do have the screenshot here for this one. Same thing. Beginning depreciation. This is where we started at the beginning of the year. Continuing items, so these are things that were that were previously in here with that are continuing to accumulate more depreciation. So that's like the additional depreciation for items that already existed. Acquisitions are items that would be added in the year. And again, these are the depreciation amounts associated with those items. And then dispositions, anything disposed of, and that comes to the ending balance. So the ending balance is where it's going to be when the fiscal year is closed. That's when the depreciation is calculated. So this is sort of like your snapshot of where we're starting at the beginning of the year and where we're gonna be. We have some non-GAAP reports as well that are suggested for the end of the year. Asset listing by grant source. So that one is a listing of transaction data, again, by source account. So that is another way to view the information based on the account information from the acquisition, from where it was purchased from. The brief asset listing is it has one line per item of all assets or subsets of them. So there are 5 different versions of this that are recommended, that are listed here. I think of this one, pretty much the brief asset listing, I think of this one as sort of your detailed view of everything, to compare to your scheduled changed and fixed assets report. So any of those fixed assets, except for the source one, gap reports. This is sort of your non-gap like detail view. That's going to show you the asset like more details there. Okay, sorry. My throat was getting a little dry. I might have been talking a little bit. Uh, Similarly, the book value report. So, this one displays depreciation information listing original cost, salvage value, book value, percent of depreciation, and last year of useful life. So this one is kind of like your full kind of overview of item information, but also information related to the depreciation. So let me see, I'm just gonna run this one real quick and see what we get. So if I wanted to compare this to my schedule of change in depreciation, I would want to make sure that I'm selecting just the capitalized item statuses that qualify. And then I could, if I wanted to do like a certain sort, like if I wanted to sort this by, say asset class or something, I could. Let me just generate an example of this real quick. This one's kind of nice because since it includes, both the original cost, but also the book value and some other fields that you can compare here. So let's see. So here's where, so we see we have an original cost column here. We have the life to date depreciation. So this is where it started. So remember when we looked at the item, record and we said that life to date depreciation is as of the last closed fiscal year. So this is basically consistent with your beginning depreciation. And then, oops, where's my report? Where did my report go? And then we have any year-to-date depreciation that's being calculated and total depreciation and book value at the end here. So this can be kind of helpful for comparing. Sorry, I don't have better figures showing here, but this can be a helpful tool for being able to go item by item and sort of compare to totals on that report if you need to. So that's a good one to have, and say, run and save at fiscal year end. Let's get back to where we were. Okay, next we have the audit report. The audit report tracks changes made in the application. A couple notes about this one. So, there's I believe the official version is recommended. Sorry, tripping over my words there. I believe the official version, when you run this would be suggested. The start and stop dates that you enter here. So these can be entered as the start and stop dates for the fiscal year. So 7/1 to 6/30. The important thing to remember though is that the date range on this report is representing like timestamps real time. So it shows what changes happened within that date range, not necessarily the items that were added with those dates, right? So if I'm entering, I mean basically right now, so right now today's date is 5/16/2025, right? If they wait until July, and then they add all their items in July, but then they're going back to close fiscal year 25, and you run the date 7/1 2024 to 6/30 2025, if they didn't, do some of the processing related to the fiscal year until July, it's not going to show within that date range on the audit report. That's okay though, I believe, because then like next year it'll pick up. I mean, basically the audit report is just showing a record of like the history that happened within the actual dates. And if that's run consistently every year, then it would still pick up, everything that happened. But that said, if a situation where you have a district that might be new to using inventory, sometimes this happened after, those that migrated. So I guess if they were running this back to a previous year and they migrated, it is possible for this audit report to come back blank, depending on when they did things, how districts add their items. I knew a district once that just uploaded everything all at once on one day, and so it is possible that if they're not making regular changes in their inventory system, this report could show blank. Alternatively, this sometimes can be a very large report. So, if they have a lot of items that they add either throughout the year or all at once, if there is a lot of activity, a lot of changes, say they upload a lot of records, this report can get pretty large and it can take a long time to run. If it doesn't complete with like a full fiscal year range, they could try using a smaller date range, like run for a month or so. Ultimately, if they don't run this one manually, if that's not working out, it is included in the report bundle. So they do not have to run this one manually, especially if it's giving them problems because it's large. Next, the depreciation posting report contains the projected fiscal to date depreciated and book value amounts, sorted and subtotaled by the asset fund with a grand total at the bottom. So that is sort of your like preliminary depreciation posting like review. And then a fiscal year end balances report. That's going to have the projected ending original cost balances for the current fiscal year. So your starting original cost plus or minus anything for acquisitions, dispositions, what we're expecting that ending original cost will be. So once you run all the reports, so that's kind of the report breakdown. Once everything, so all the items are entered, we've reviewed the reports, everything looks good there. Now the step would be to close the fiscal year. So on the core fiscal years page that we looked at earlier, you would go in and close that current year. A couple things that are going to happen when that is closed. That's going to update the last closed fiscal year in the core configuration by 1 year. And then it's also going to add 1 year's worth of depreciation to that life to date depreciation field on each item. Also updates the beginning balances for the new fiscal year on the item record as well. And then when that's closed, when the fiscal year is closed, the inventory fiscal year end bundle is going to be generated. This year it is going to, instead of sending to the email, it is going to be sent to document storage. Now, I mentioned at the end of the USAS session, we will have a session about document storage on May 30th, and that's when we'll have like more specifics on document storage itself. But when it comes to the inventory side of things, document store is going to be rolled out. For inventory, they already have the work set and ready to go so that once document store is available, it's going to add a document storage, I believe under the system menu. There'll be another page in inventory. And so by the time that it is fiscal year end time and they're closing, what's going to happen is instead of that bundle having to send a zip file via email, that's just going to automatically be set to go so that when it generates, it'll send to document storage to that document storage page instead, kind of like your file archive now, how it works with like USAS and USPS reports to the file archive, but instead it'll be document store. Oops. All right. Oh, and then I had a couple, so I actually added a slide with some notes about that. So that document storage page is not currently visible. If you go into any inventory instance right now, do not expect to see it. When it's released, I'm sure we'll send the release message and everything, so everyone will be informed. But we have our meeting now to make sure that we have time before the year end to get everything to you all so you can do the meetings for your districts and stuff. So I wanted to include that properly in here in the checklist. But yes, all this is happening right now, so that page isn't currently visible. But yeah, again, I believe it's out of the system menu is where it will be. It will be available it'll be visible to users with inventory standard role or higher level access. Again, that fiscal year end bundle zip file, the email, it's no longer going to be emailed. So when it changes, it'll be a switch. It'll switch so that when it's closed, it's going to go there instead. We have had some questions, with adding this, for the fiscal year end bundles to inventory, about previous year's bundles, about like the classic reports and everything. This initial implementation, I believe, is not planned to include that option to import the previous fiscal year end reports, but we know that that's something people want to do. So that would be in a future update. So, really, like when we're talking about it for this year, this is like, it'll be in here. That way, when they're closing for this fiscal year, that's going to be the plan, but more information to come on looking back at the other years and everything. All right. So after they close, then in core fiscal years, they would create the new year. They would create the next fiscal year and open it and make it current. We have a note here too, if the gap flag is not enabled and they would like to start on gap for the next fiscal year, then and I think the checklist is a contact your ITC. There are some steps here where the ITC would click on enable gap flag in the core configuration, and then that would run the process to update, make the reports available, the gap reports available, make the correct fields available. And that does have to be with somebody that has an admin role to be able to make that change. So if there's anybody in that situation where they don't already have gap enabled, that would be the steps to use for it. And then yeah, once that's enabled, they would be able to start with the new fiscal year. Alrighty. All right, so that brings us to the end of our inventory fiscal year end review. Kind of just have the list of trainings that we went over earlier. So I've mentioned this May 30th one a couple times now, so that's out there. And then yeah, reports and grids. I know at the end of USAS I kind of talked about reports, but I also am very excited for the grids training that we have in July. That one was kind of a like a different idea. I don't know if we've like focused kind of specifically on grids before, even though we constantly are on them and talk about them. But just talking about like some of the basics with the grids, some tricks with the grids, and kind of spending some time focusing on those mechanics versus on like a sort of transaction or that sort of thing. So again, that'll be USAS and USPS together for a merge session. All right. Well, that's all I have. Do we have any questions before we wrap up? Okay. Well, thank you all so much. Have a good day. Good luck with the fiscal year. If you do have any questions as we get closer to that, send us a ticket and we're happy to help. When this session does close too, there will be a survey. The browser is going to pop up and have a survey you can take for the training. If you would fill that out, any ideas for future trainings or feedbacks on how you liked this? I know we started doing it where we're doing USPS at one time and then USAS and inventory. It helps us to know how you feel about those things for future training planning. So all right All right, that's all I got. Thank you all very much. Have a great weekend.